In this video, I'm going to explain the types of life insurance we have so that you can determine which one is right for you. If I ask 100 people what life insurance is, most people will say it's money paid to your family when you die. And why that is true is only part of the story. What many people don't realize is that there are different types of life insurance, and choosing the wrong one could leave you underinsured, overinsured, or paying for something that doesn't fit your goals. Today, I'm going to break down the major types of life insurance in simple language so you can understand which type may fit your family needs. Um, Two families, two different needs. And I'm going to tell you a story. Now, let me tell you about two people. The first is Sarah. She's 35 years old. She's married, having two young children. She has a mortgage. Her biggest concern is making sure her family can stay in the house and pay the bills if something happens to her. Then we have James. He is 55 years old. His children are grown. His mortgage is almost paid off. He's thinking about retirement, leaving a legacy, and creating financial flexibility for the future. Both of them need life insurance, but they don't necessarily need the same type. That's why understanding the different aspects of life insurance really matters. The first type of life insurance is called term life insurance. Term life insurance is often the simplest type of life insurance. It provides coverage for a specific period of time. For example, 10 years, 20, or 30 years at most. If the insured person passes away during that term, the policy pays a death benefit to the beneficiaries. Now, here are the advantages. Generally, it has lower initial premiums. It's straightforward protection. There is no medical required. Often useful for temporary needs, such as income replacement, raising children, or covering a mortgage. Now, what you need to consider under this coverage are the coverage typically expires at the end of the term unless renewed or converted. Secondly, it generally does not build cash value. Now think of term life insurance like renting a house. You get protection during the period you need it. Then the second one is called whole life insurance. Whole life insurance is a type of permanent life insurance. As long as required premiums are paid and policy conditions are met, coverage can remain in force for life. It also includes a cash value component that grows according to the policy's provisions. It has these advantages. One, lifetime coverage. Secondly, it has cash accumulation. Thirdly, it has predictable structure. Now, there is a concern. Premiums are often higher than the term life insurance. Whole life is often used by people who want lifelong protection and a more predictable policy design. The next one is called the universal life insurance. Universal life insurance is another form of permanent life insurance. It generally offers more flexibility than the whole life. Depending on the policy, you may have flexibility in premium timing or death benefit structure. Now, these are the advantages. It has the lifetime protection potential, it has cash value components, and there is greater flexibility. And these are the considerations. It requires ongoing monitoring, and its performance and cost can vary by policy or the organization, the carrier. The next one is called the Index Universal Life. Index Universal Life, often called IUL, is a type of universal life insurance. Its cash value growth is generally linked to the performance of a market index. It's subject to caps, participation rates, spreads, and policy expenses. Importantly, an index-linked strategy does not mean direct investment in the stock market. Now, there are some reasons why people like IUL. Many use it because they are looking for permanent protection, cash value growth potential, tax advantage features, access to policy values through loans or withdrawals, subject to policy terms. And there's an important proviso. An IUL is not a substitute for every investment account, and it's not appropriate for everyone. It should be evaluated within the context of a broader financial strategy. I must say that I have three types. I have three policies. This IUL, I have them. Then we have final expense insurance. Final expense insurance is designed primarily to help cover end of life expenses. These policies are generally smaller and intended to help with funeral expenses, burial or cremation costs, outstanding bills, and the advantage is easier qualification in many cases. Uh, it's affordable. It has affordable coverage amounts, and it helps reduce financial burden of family members. Say, for example, if you are living in the United States and you have parents living with you, you should get final expense for them. Some of them, when they pass, you may even need to take them back home. You need this type of life insurance. Okay. There is the AD&D. Most people get this coverage at their job, meaning that many companies offers it to their employees as benefits. Now, the full meaning of AD&D is called accidental death and dismemberment. The policy covers death and injuries resulting from accidents. The exact circumstances under which your AD&D coverage applies are specified in your policy, but you are generally covered for loss of limb, loss of sight, hearing, or speech, or permanent paralysis. It also covers death resulting from an accident, such as a car crash. It is important to know that benefits under this policy are organization specific. In most cases, you may have to be on their clock at the time of the accident. So if you have the accident after you have clocked out, I'm sorry, you may not be covered. Now, which type of these policies is right for you? The answer depends on your goals. If your goal is protecting your children and replacing income, you may consider term life insurance. If your goal is lifetime financial protection, a permanent policy may be worth exploring. If you are looking for cash value accumulation and flexibility, then certain permanent policies may fit you. And for covering funeral expenses, final expense insurance may be appropriate. There is no one size fits all solution. The best policy is the one that aligns with your needs, your budget, and your long term goals. Now, the biggest mistake most people make, many people spend more time researching on cars, television, and vacation that than they do protecting their family's financial future. Life insurance isn't about expecting the worst, it's about preparing for life's uncertainties. Because if something happens to you, your family shouldn't have to start over financially. In conclusion, life insurance is more than a policy, it's a strategy, it's a protection, it's about planning, it is love in action. Whether you are looking for temporary coverage, life protection, cash value accumulation, or legacy planning, understanding your option is the first right step. Now, in this video, if this video helped you understand the different types of life insurance, be sure to click on like. I want you to subscribe and click on the notification button. Then share it with someone who needs this information. And in the comments, I want you to answer this question for me. What is your biggest reason for wanting life insurance? Is it for family protection? Is it for retirement planning? Is it for legacy creation? Or you are thinking of final expenses? I love to hear your thoughts. Please leave them at the comment section below. Now, I'm going to leave you with a quote. Life insurance is not about preparing for death. It's actually about making sure that the people you love most can continue living the life you work so hard to believe.